Oh my God, major recession is here right now. The markets are gonna crash. Are you and your family ready and safe financially from a recessional crash in the coming weeks or month? They're saying the probability of a US recession in the next year has fallen to 15%, according to Goldman Sachs. But when have they ever been accurate, and can they ever be trusted? The three biggest indicators of recession have all been triggered. Look at this, right? The Sums rule of unemployment, that has just been triggered like 2 months ago. You see, since the 1960s, right, it has been triggered, the SAM rule of recession, 9 times. And each time, see, the gray area leads to a recession. Each time, it accurately predicts a recession. It never misses. That's the Sums rule of recession. And the heavily watched US 10-year, 2-year Treasury yield curve that also tends to be a very accurate predictor of recessions. Look at this. For the last 40 or so years since 1988, right, every time when the yield curve goes negative and then turns positive again, right, like these instances, it predicts a recession very accurately, right? Predicted the 2009 GFC crash, predicted the 2000 dot-com crash, right? Even the COVID crash, these gray bars are recessions, right? Even these short ones, small ones, it predicts, right? But even more accurate and more time sensitive is the US 10-year and 3-month Treasury yield curve, right? And whenever that goes uninverted, like we just saw, right? And then turns positive again, it also predicts recession, and this record goes all the way back to 1925. It even predicted the 1929 crash, which they call the Great Depression, right? 1975, the year 2000, right? These are all very accurate indicators. Now, I know what you're thinking. You're saying, but Pablo, the economy is fine because look at the job market, right? The job market is still strong. Lots of jobs being generated. But look at what jobs are being generated. It's all government jobs. For the past 7 or 8 months, private sector has generated very few jobs. And on top of that, look at the firing. You see, over the last 2 months, the job finding rate is collapsing, right? These kind of sharp down moves, collapses, tend to happen just before recessions, like, again, 2008, 2009, GFC, year 2000, dot-com bubble crash, right? Even 2020, just before the COVID crash, right? Jobs market is not looking great. Keep in mind, unlike the 3 major indicators, predictors of recession I told you early in the video, jobs are not a predictor, not a leading indicator. They're a lagging indicator. They lag the economy, right? Because the jobs are the last thing to go. Think about a company would cut down costs and cut down, spending first before they would ever fire anybody. It's too much legal work and hassle. So jobs are the last to go. So I think crypto and stocks probably have one more leg up, a few more weeks, maybe even a few more months before a big crash.